is large. Sandeep, let me come to you. Hi, very good morning. Thanks for waiting by so patiently. You've been a silent spectator to this entire discussion. Where do you stand?
Yeah, see, first of all, India has a $100 billion deficit with China. And we have seen on the rare earth metals front also that even after so much discussion, they have refused to supply rare earth magnets to Indian companies. There is hardly any flow. So in this context, after all of this, allowing Chinese companies to come in when the government is spending around 3 lakh crores on giving incentives to companies for setting up all these PLI in form of PLI benefits, I think this looks highly unlikely. A similar report was published sometime in November last year also, and the same thing has got rehashed and without any official comment from the government at all. So I think generally the market is somewhat bearish. So yesterday there was news of this 500% tariffs and all. So all of this got combined with this, and the stocks got sold off. Many of the companies, if you see, L&T competes internationally with all companies. A majority of their projects come from the Gulf, etc., where Chinese are also big players, and they are competitive everywhere. And similarly, many of these transmission equipment companies and all, they have more order books from overseas than from India. So I think it was an overreaction, and logically it seems unlikely that the Chinese will be allowed to come in such a big way. Last time Russian and Chinese equipment was allowed in the 2000, I think 5 to 15, in that period when the custom duties were reduced to zero and these equipment were allowed to come in. Subsequently, there was no service, and the people who set up plants using, and I forget there were 1 or 2 plants which got into big issues because the spares were not there and the servicing was not there subsequently. So I think this, I would think this is a very, very unlikely scenario.
Very, very unlikely is the verdict coming in from Sandeep. Kunal, let me come to you. BHEL, Trill, Schneider, MV Photovoltaic, Hitachi Energy, all seeing cuts, and in fact even a Jupiter Wagons and ABB all seeing cuts between 5 and 10%. Any of these looking attractive on charts today for a trade? Because what seems to be the consensus is that this is likely not happening, and the cut that we saw yesterday should ideally therefore reverse.
See, I think if that happens, then I believe that the two prime candidates for a reversal or a bounce back, or what you may want to, would be BHEL as well as L&T. I think both of these stocks are the ones which I think are the ones which generally get a lot of traction on the short to medium term charts. And the best part was that the trade for these stocks, the trend for these stocks was extremely positive. Just about till maybe a good part of the yesterday's trading session first half. So I think in that context, these two are the ones which I would believe could be kept on radar. What's very important is that the volumes which started to increase for these stocks on the downside, whether we see a complete reversal of the volumes happening for these stocks on the way upside, I think that's something which is going to be very important. And there are 50% matrix in terms of price breakout. So if these stocks, for example, BHEL fell from 305-ish odd levels to 275 thereabouts on an intraday basis, if it manages to come back towards 50% retracement, say a 290 plus mark, that I believe could be a litmus test to watch out for. So these are the two important characteristics which we typically look out for when the stock goes into a process of a bounce, assuming the news flow doesn't satiate the current market perspective as such.
Okay.
What announcement coming in wherein they've intimated this the exchanges about what their payment plan is going to be, and also the bigger fact that the Department of Telecommunication is going to be setting up a committee to once again reassess what this due amount is going to be post 2036. Sandeep, your thoughts on how positive this could be on Vodafone, because finally now there is clarity on how much burden they need to be dealing with at once.
Yeah, so what this will do is that it will help the company survive. So I don't think Vodafone Idea is going to go out, but the challenge is related to the overall debt and the fact that they have been losing customers to Jio and Airtel. That fact still remains. So actually, when we evaluate companies, we have to see over its lifetime how much cash flow it can generate. So in my view, there will be no positive cash flow generation by Vodafone Idea over the next 20 years if we take it holistically. So actually the value of the company stock should be zero. But then the stock reacts on news.
But even now, the fact that you survive, doesn't that give you a positive bias with regard to what could happen? Because at the end of the day, Sandeep, it's a three-player market. So it's not like, and the market is not expanding in any fashion. So therefore, the third player also ought to make some amount of money.
Yeah, but then the debt burden is so high.
That's true.
That it's tough for them to repay the debt and then make money beyond that. So I think that's the bigger challenge, because they went through such a long period of stress, and once the confidence of the customers is lost, it's very tough for them to start gaining market share over Airtel and Jio. So I think that's the only issue. So good part is that company is going to be around.
Yes.
From my perspective, because they will not generate any money at cash flow for shareholders, so actually the stock has no value. But on sentiments, obviously, like with this news flow, stock could go up 5-10% on a single day. I have no idea.
That's true. Kunal, on charts, Vodafone?
See, I think we've been establishing that the level of 10 approximately is a good base for Vodafone Idea, and the stock could try and just about go into a trading zone. But I'm not sure whether we could be looking at a breakout of sorts for the stock price. My expectation is that maybe the stock can come back towards 12 to 12.2 kind of a zone on the better side today. But then eventually, I think if the markets go into some bit of a sulk in terms of profit booking, then you might expect that this stock would also go into a mild correction. So not too much of a high expectation from the stock price today. But yeah, potentially intraday wise, maybe 12 to 12 and a half is what I would expect as a broad range, which the stock can test on the higher side.
Okay. And Sandeep, today, another stock that's going to be in focus is IEX. The market coupling hearing is going to be taking place today in the court at 10:30. Your thoughts on this entire issue that's come up? The stock of IEX did very well a couple of days ago, and they're hoping for a favorable outcome. Your thoughts here?
Yeah, so then it becomes a 0-1 game sort of. So if they get a favorable outcome, then obviously the stock has upside, because even with when the energy prices came down and there was some uptake, etc., consumption increase, the volumes held up and they have seen growth also. So in that context, the stock is not expensive, especially if you look at the way many of the other exchanges have done. So if they get a favorable verdict, then it could be a significant positive for the stock.
Okay. And Kunal, are you also spotting any upside on the technical front for IEX, given that we've seen an elevated move about a couple of days ago?
Yeah, there is an element of positivity which can creep into the stock price. So what's happened staying in the last 2 or 3 days, there has been a dramatic change in the price trends for IEX. So the stock was almost at 135, 36, if I'm not wrong. A couple of days back, just prior to the news flow for IEX, the stock went up to almost 150, 155 kind of a zone yesterday, day before, and now it's settling on to that higher range. So the fact that the stock is not sulking back again into a price correction, trading at a much more higher band, indicates that there could be a possibility. So, market participants are now taking this as a more potential possibility that the stock may see a further upside from current levels. But in pure technical terms, if I have to look at this, I would look at a breakout of 155 mark for IEX. So if I have to initiate a trade, I would look out for 155 on closing basis. If the stock manages to close above those levels, that's where we are looking out for a major reversal on the upside for IEX. Otherwise, till that time, it might just be trading rallies which could happen to the stock.
Okay, all right. Let's go across. We have Piyush Pandey, Centrum India, joining us this morning as well to give us better perspective on what's happening with regard to a Vodafone. Piyush, it seems evident that the government has done all that it could with regard to the Vodafone and keeping the third player in the telecom space alive. But talk to us about how significant this is from a Vodafone standpoint. One is survival. The second piece is starting to get cash flow in. Do you believe that it's so significant that it's probably positive with regard to where cash flows is concerned?
Yeah, it's a significant release in terms of cash flow for the next 10 years, and especially on the Asia dues front. and the dues are being frozen for the next 10 years, and the payments are broadly minimum at around 100 crores per annum. But one thing I would say that Vodafone still has to make the payments for these spectrum dues, and which can be close to roughly 15,000 crores per annum. And their current cash EBITDA is just 10,000 crores. So even after this cash flow relief on the Asia dues, they still need to raise a big fundraise. plus, plus they might also need to do a tariff hike in the coming months to manage their spectrum dues payments, plus ramp up their capex on the 4G and 5G front to catch up with peers. So of course, a significant relief, but still more needs to be done.
Okay, and Piyush, the other big news piece that we're getting out of this announcement made by Vodafone is that there's going to be a DoT committee that's going to be reassessing the dues that the company owes post 2036. How do you think that development could take shape, and could that also add another round of hope for Vodafone's competitiveness in the market?
Yeah. So the current Asia dues outstanding includes almost 50% is principal and about 50% is the principal and remaining 50% is the interest and penalty part. So I would say we can expect some significant reduction in the Asia dues post that amount gets finalized. But see, as of now, we still don't have clarity like how much it can go down like further. But still, I would say even if we exclude that, this 10-year moratorium for the next 10 years, that still remains significant one. And post this release, Vodafone should be able to should find it easy to raise another fundraise and manage its near-term cash flow requirements.
Piyush, from your estimates, what changes significantly in your opinion, and how much does the target price change by? What's your current target price? How much does that change by?
So my current target price as of now is rupees 10 per share. We have a neutral rating on the stock. See, the stock has already run up over the last 3-4 months in anticipation of this release. So broadly, I would say current stock price mostly captures in these positives from these current measures. But I would say now I think it depends on how they are able to raise the next round of fund, how they are able to ramp up their 4G and 5G capex, and most significantly whether they are able to add customers going ahead, because they still continue to lose market share. So once they're able to get up a certain level of capex and they start adding customers, that can be something which can be trigger on their valuations and the stock price.
Okay, all right. Piyush, we'll let you go on that note. Thank you so much for coming in and giving us that perspective very quickly, because we're already entering pre-open territory, and we want to cover that as well. Pre-open, Vodafone 10% higher, still very, very early minutes, viewers. But nonetheless, there's that positive move on the counter. Let me come back to Sandip. Sandip, markets have been slightly cautious or under pressure, if I can call it that, over the last couple of days. Momentum seems positive. Domestically, we're doing well. Internationally as well, some of the moves are not particularly negative, except for possibly some comments coming in from President Trump saying that there'll be additional tariffs on India and the like. Why do you think that markets are coming under some bit of pressure? Because there doesn't seem to be any trigger for that.
So I think one of the basic reasons last year markets were weak was the huge flow of IPOs combined with the FI selling.
That's true.
Now the foreign investor selling still continues because foreign investor flows typically follow momentum. And we've seen a lot of markets do very well. If you see Korea, that market's up, I think 80% on year on year.
1 year, yes.
So I think a lot of the money is getting diverted to markets which are doing well, as many of the FII flows, especially the ETF flows, tend to be momentum following. And so I think the challenge is that when does the Indian underperformance reverse and get foreign funds start to come in? Because I think whatever taxation changes, etc., happened after that, we've seen continuous FII outflows.
Yes.
So let's see whether the budget can address that or not. So even without that, if the result season turns out to be good, which it should be, I think the expectations are low this time, so results should be pretty decent. So markets should stabilize.
But Sandip, you're saying the expectations are low. But what about pockets like consumption, where we are expecting that GST pay to have happened by now, and we're expecting to see some positivity on that front? How do you think consumption will fare in Q3?
So quarter three, there was still some disruption. So I think on one side, some sectors like autos, some durable companies should report good numbers. Consumer non-durables should start seeing better numbers from this quarter, the fourth quarter, because and those MRP changes, etc., were there. So that led to some systemic disruptions. So I think consumption overall should be doing well going forward. Third quarter necessarily might not be across the board improvement, but improvement in some pockets.
Some pockets, okay.
Okay, and Sandeep, you're calling that ideally that if everything remains good and the budget also comes through well, you could see a rally in Indian markets. That is the logical conclusion. What pockets or spaces?
So I think financials look good. Even the capital goods sector, despite whatever the news flow, given the larger companies, given their order books, etc., look well placed. Companies like Bharti should do well. Some consumption companies should do well. So I think overall this year looks fine. I wouldn't be too negative. I would think that it won't be an extraordinary year, like we can't expect 25-30% kind of return, but I think it could be a year which from the current levels could by the end of the year be a 12-15% kind of return year.
And within the financials, would you like the lenders more? Would you like to play through financialization of savings, insurers, NBFCs? How would you play it this year?
So across our strategies, we have different kind of stocks. So like in the large banks, we have ICICI, Axis, and SBI.
Correct.
Among NBFCs, we have L&T Finance, M&M Finance, and Manappuram. So I think we are trying to play it through different stocks in different strategies. But overall, given the fact that NIM should stabilize, in some cases they could see some uptick, and the credit growth is much better now vis-a-vis what it was last year. The earnings growth picture has improved for financials.
Okay, so that's the word coming in from Sandip Sabharwal. Sandeep, thanks so much for your time this morning, and we'll let you go. Thanks once again for joining.